Hello everyone. Let's start our today's discussion. I hope you all remember that in our previous two classes, we have discussed question number 1 and question number 2 of this official mock exam issued by ACCA for June 2025 exam attempt for our advanced taxation course. In our today's class, we will be looking at question number 3 of this exam paper. I'm your tutor, Owais Mirchawala, and I will be providing you this debrief on question number 3. With this, our discussion on this official mock exam for June 2025 exam attempt paper will be completed. Discussion on these complete exam papers are really important in finalization phase of your exam preparation, as it gives you an idea that how you have to deal with all of the topics together in your actual examination, and it also gives you an idea about the most important time management skill, that how you have to ensure that you complete whole exam paper in time. These all past paper discussion sessions, in which we are looking at 6 complete attempt papers, are really important for you guys before you move towards the 3 mock exams, which I'm providing you for your self practice, and I provide feedback on them. Okay, so in our today's class, we'll be looking at question number 3 in a very detailed manner. We'll be reading this entire question, including the exhibits and the requirement. And then at last, we will be actually drafting the whole answer in our today's class. And wherever required, to refer any topic for revision, we will be using these life-saving summary notes in which I've summarized the entire course in just 57 pages. Okay, so let's start with our discussion, a detailed class on this question number 3. Okay, let's look at it. You should assume that today's date is 1st June 2025. B and Dana are two unconnected clients who will both shortly commence employment with Ideal PLC. See, this is the reading of the introduction of the question. Just read with patience, don't rush. Try and identify maximum possible data, which will be helpful when we will be actually drafting the answer. Let's move forward. B has requested advice in relation to the tax implications of receiving additional salary versus the use of property provided by Ideal PLC. Dana has requested advice in relation to the capital gain tax implications of a future sale of her main residence depending on choice of principal private residence status, and the income tax and national insurance contribution implications of joining Ideal PLC share incentive plan. So the examiner is telling us about his basic expectations from the question. Apparently, about B, it's something about employment income, like receiving additional salary versus the accommodation from the employer. And then about Dana, it's about principal private residence relief, which is the capital gain tax thing, and something about joining the share incentive plan. The following exhibits available on the left-hand side of the screen provides information relevant to the question. B, which relates to requirement A only, and Dana, which relates to requirement B only. Let's look at the information should be used to answer the question within your chosen response options. You all remember that there's word processor in which we draft the entire answer, and then there is a spreadsheet which can be used for calculation, but it's not mandatory. Okay, whatever answering tool you are comfortable, you can use that. If you want, you use a spreadsheet. Otherwise, in the word processor, you can use this table function also. We have discussed all of this in the previous 2 questions also, and we will be illustrating it again also when we will be drafting the answer of this question. Let's look at exhibit number 1, that's B. Let's look at it. B is UK resident and domiciled. B has accepted a 1-year contract of employment from Ideal PLC, which commences on 6th of April 2026. B will receive a basic salary of £85,000 for the year. Will have no other source of income in the tax year 26-27. So some basic information about this guy B, who is joining the employment on 6th April 26. Existing salary is £85,000, and there is no other income in the relevant tax year. Just the start of the question. Ideal PLC normal benefits package offered for a 1 year contract. Ideal PLC is renting a flat near the company's office for base use. The annual value of the flat is £2,400 and its market value on 6th April 2026 will be £265,000. Ideal PLC will pay the rent of £850 per month and household bills of £140 per month. Ideal PLC will provide furnishing at a cost of £1,700. So your employer is providing you an accommodation which the employer himself has taken on rent. So when the employer takes an accommodation on rent and then provides it to an employee, then in accommodation benefit, the basic charge, we look at the basic charge that's higher of annual value and actual rent paid by the employer. Additional charge is exempted because the accommodation is not owned by the employer. And ancillary charge like these household bills will be completely chargeable. As far as furniture is concerned, it will be subject to usage benefit at a rate of 20%. These all are very basic things. I hope you all remember. You just go to summary notes, you write accommodation benefit. As you write the accommodation benefit, uh, here you go, car, fuel, van usage, and here it's your accommodation benefit. Basic charge is higher off actual rent paid by the employer and the annual value. Additional charge will not apply because the house was not owned by the employer. The employer itself is taking the flat on rent. So there is no additional charge. Ancillary charge will be applying. That's £140 per month, equal to the household bills he is paying. Okay. So some thinking about the accommodation benefit. And let's read further. So since they will be providing the accommodation, so we will have to think about the accommodation benefit. Ideal PLC payment of additional salary. So will we be going in depth? Yes, when we'll be drafting the answer, we'll go in further depth. Currently, we are just picking up the topics that, okay, employer is providing an accommodation, so there will be accommodation benefit, basic charge, additional charge, ancillary charge. Our mind started to work. There's furniture, so furniture goes for usage benefit at 20%. Okay. As an alternative to the normal benefit package, Ideal PLC will offer B an additional salary such that additional cost to Ideal PLC is equal to the cost of providing the normal benefit package. The employer is saying that if you want, leave this accommodation and we will pay you an additional salary and you take up your cost on your own. We'll just pay you additional salary. But Ideal PLC, the employer is saying that the additional salary which we will be paying is that our total cost do not exceed as compared to the situation when we were providing you the accommodation. See, if the employer provides accommodation, he has to take up the cost of accommodation and he has to pay class 1A employer NIC. I hope you all remember the rules. Cost of accommodation and class 1A employer NIC. If the employer will go for additional salary, he will have to pay that additional salary. And then there will be class 1 employer NIC, not 1A, only class 1 employer NIC. Obviously, we're looking at the depth of these rules as we move forward. B's cost associated with accepting the additional salary alternative. If B accepts the additional salary alternative, she will live with the friends, paying them £600 per month. In this case, she will incur the train fares totaling £1980 for the year in commuting to the office on a daily basis. When you come from your home to office, it's not an allowed expense because that's your normal traveling. It's not official traveling. You're coming from your home to the office, so it's not official traveling. It's just part of your normal life. Okay. Official traveling is when we go to a client or we go to a temporary workplace, not to a permanent workplace. I hope you all remember. Like in the employment income, you have studied that what is official traveling. When we say that If the employee is using anything for his official use, then only he get the deduction. And what is official traveling? It do not include traveling from home to permanent workplace. Okay, it is something which we call as temporary traveling. Okay, so now if we look at this question which is related to B and the requirements A, all the requirement A were in relation to the B as it was stated at the start. Requirement B is in relation to Dana. So we have read this exhibit relating to B. Now let's look at the relevant requirements. I want you all to listen to me very carefully. Okay. The question is B and Dana, and we are looking at this part A. Okay. Now, calculate the amount of additional salary which Ideal PLC would be prepared to pay B as an alternative of the provision of the flat. See, Ideal PLC said that they can pay additional salary to B such that their total cost remains the same in both of the situations. As an alternative to the normal benefit package, Ideal PLC will offer B additional salary such that the additional cost to Ideal PLC is equal to the cost of providing the normal benefit package. They want to keep their total cost same. Now, what's the requirement? Calculate the amount of additional salary which Ideal PLC would be prepared to pay B as an alternative to the provision of the flat. Okay, so just listen to me. Ideal PLC is willing to pay additional salary to B as an alternative to provision of flat such that total cost remains the same in both options. Okay. Now, total cost of Ideal PLC in case of provision of flat is, what is the total cost of Ideal PLC? See, I'm using this table function here to make a chart, to make a spreadsheet working. You can solve it on spreadsheet also if you are comfortable there. I feel more comfortable to solve it on a single screen. That's why I'm using the table tool. It's completely your choice in your examination. Now, what is the cost of Ideal PLC in providing the flat? See, in this case, Ideal PLC is paying the rent of £850 per month. They are paying household bills of £140 per month. And they are providing furniture at a cost of £1,700. Annual value or the market value is not their cost. Their cost is rent, household bills, and furniture. Rent cost. What is the rent cost? It's £850 per month. I'm copying the pound sign. Just listen to me. £850 into 12 months. Okay. We are calculating the cost of Ideal PLC, the employer. So that gives me £10,200. Then what they are paying? They are paying household bills of £140 per month. Household bills £140 per month into 12 months. Just listen to me carefully. 140 into 12 months. So that's 1680. And they are paying furniture cost. That was how much? That is £1,700. This is what Ideal PLC is paying. And along with that, they will be paying Class 1A employer NIC on accommodation benefit. They will be paying the Class 1A employer NIC on the accommodation benefit, or you can say on benefits provided, because these all are the non-cash benefits. So let's look at it. The benefits provided are accommodation benefit, and then there is usage benefit. Okay. Two types of benefits are provided in this option. to B, it includes usage benefit on furniture of £1,700 into 2, 20%. Usage benefit is 20%. I hope you all remember. So 1700 into 20%, that's £340. Further, accommodation benefit is, okay, basic charge at higher of annual value. I will repeat the things again, so there's nothing to worry, okay? Annual value is £2,400. Annual value is £2,400, and actual rent paid by employer is £10,200, which we are self-calculated. Okay, £850 into 12 months, that was £10,200, which we are self-calculated. Just have some patience and listen to me. This is the basic charge. Additional charge will not arise, as accommodation is not owned by employer, and ancillary charge will be equal to household bills cost of £140 per month into 12 months, that is £1,680. Okay, so total accommodation benefit is 10,200 plus £1,680. So that is 10,200 plus 1,680. So that is 11,880. Total non-cash benefits provided are 340 was the usage benefit and 11,880. So that gives us 12,220. Class 1A employer NIC will be 12,220 into 13.8%. So that gives us 1,686. So will you repeat it again? Yes, I will repeat it. Okay, so there is nothing to worry about. So this is the total cost which will be arising. Okay, total cost for Ideal PLC. This will be 10,200, 1,680, 1,700, and 1,686. So that is 15,268 pounds. Okay, just listen to me carefully and we'll repeat it again. See, Ideal PLC is saying that we will pay you additional salary such that our total costs do not exceed. So he said, okay, if they are providing the fund, this flat, what is the total cost? They are paying this rent. They are paying this rent. Okay. They are paying household bills and they are paying the furniture. These are the actual outflows which are happening. These are the actual outflows which are happening. Along with that, they will also be paying Class 1A employer NIC. See, Class 1A employer NIC is on the amount of the benefits. Class 1A employer NIC is on the amount of benefit. And the benefits are valued according to employment income rules. Furniture, its usage benefit, 20%. You all know the usage benefit. Okay, you all know the usage benefit, 20%. Then there is accommodation benefit, basic charge, annual value and actual rent. Additional charge will not arise as accommodation is not owned by the employer. Ancillary charge, any additional cost incurred, those are the household bills. So total benefit is 11,880, which is the total non-cash benefit. 11,880 plus 340 of the usage benefit. 12,220. Class 1A employer NIC is 13.8%. So that gives you 1686, which is the cost. So the total cost for IDEL PLC in this case was 15266. 15266. That gives you the total cost for IDEL PLC. Now, what IDEL PLC is saying is that instead of this, we can give you an additional salary. Now, how much additional salary they are willing to pay such that their total cost do not increase? If IDEL PLC will pay additional salary to B, then in that case, they will have to face class 1 employer NIC also. Okay. Additional salary which IDEL PLC can pay such that total cost do not exceed alternative of providing flat will be 15226 divided by 113.8%, which is the class 1 employer NIC rate, 13.8 multiplied by 100%, because we are keeping it this as the gross value as the total cost. So divided by 113.8 multiplied by 100. So they will be willing to pay 13,415 pounds. Okay. So please repeat it again. We have a lot of queries. Let's look at it again. Okay. Let's do a quick review of what we have discussed. Okay. So what were the cost of IDEL PLC of providing the flat to B? They were paying this rent that was 850 pounds per month. See, we are looking at the cost of IDEL PLC, like what were the outflows and the expenses they were doing. They were paying this rent of 10,200 pounds, which came from 850 pounds per month into 12 months. They were paying household bill. These are their outflows, the expenses which they are doing. And then there was furniture cost that was 1,700 pounds, which they were incurring. These were the outflows. Along with these, they will have to pay class 1A employer NIC, which is paid on the non-cash benefits when we provide it to the employee. See, the NIC is not paid on your actual outflows. It is paid according to the valuation of the benefits. So on furniture, there was usage benefit, 1,700 pounds into 20%, and accommodation benefit is basic charge, additional charge, and ancillary charge. Okay, we got the total accommodation benefit. Total non-cash benefits were 340 plus 11880. Okay, 12,220. Class 1A employer NIC at 13.8%. That gave us 1686. Okay. Now, if you look at the total cost, rent, household bills, furniture, class 1 employer NIC, so the total cost was 15,266 pounds. Now, IDEL PLC said that they are willing to pay additional salary to B such that their total cost do not exceed. Now, if they go for additional salary, they will have to pay class 1 employer NIC also. Now, class 1 employer NIC rate is 13.8%. 0% band is being ignored. Reason being is that B is already getting a basic salary of 85,000 pounds. So now the total cost will be 113.8, the salary, and 13.8% NIC. So total is 113.8 multiplied by 100. So the additional salary which they will be willing to pay is 13,415 pounds. See, what I believe is that this wasn't difficult, but obviously it required good intellect level, a good understanding at the end of the student to develop this answer. Okay, let's move forward. Now, part 2. Explain with supporting calculation B's total cost under each option, whether or not it would be financially beneficial for her to accept the additional salary rather than the provision of flat. So now we have to think from the perspective of B. Okay. Now in part A2, we have to think from the perspective of B. Let's look at it. I want you all to listen to me carefully. Now, in alternative one, B's only cost will be income tax on non-cash benefits provided in form of accommodation and furniture. Okay, see, just think about it. In alternative one, B is getting a complete accommodation, employer is paying rent, household bill, furniture cost, everything. B will only have to pay income tax on the total benefit he's getting. Okay, now no employee NIC on non-cash benefits. Okay, income tax for B will be 12,220 pounds. 12,220 pounds multiplied by 40% since B is a higher rate taxpayer due to his existing salary. So it's 4,888 pounds. B is a higher rate taxpayer due to his existing basic salary of 85,000 pounds. See, in alternative one, his basic salary is 85, just to show you. In alternative one, the only cost which B will have to pay is the income tax, which he will have to pay on this benefit. Okay, on this total non-cash benefit, the only cost will be his income tax. Now, in alternative two, he will get an additional salary, but he will have to pay some cost from his own pocket. He will pay a rent to his friend. He will have to pay this additional cost of traveling. Okay. Now, in alternative two, B will have to incur some costs from his additional salary of 13,415 pounds. His net cost in this situation will be, let's look at it. I want you all to listen to me carefully. Very easy. Okay. Rent paid to friend. How much rent he will have to pay to his friend? He will have to pay 600 pounds per month. 600 pounds per month into 12 months. So he will have to pay 7,200 pounds. He will have to pay additional traveling cost. That is how much? 1980 pounds. The train fares, 1980 pounds. Then he will have to pay income tax on additional salary. See, when you get additional salary, obviously you will have to pay the income tax. On his additional salary, he will have to pay income tax. Now, what will be his income tax? 13,415 pounds into 40% since he is a higher rate taxpayer. We have already commented on it due to his existing salary. So that is 5,366. He will also have to pay class 1 employee NIC on additional salary. See, salary is a cash benefit, so you'll have to pay class 1 employee NIC. The rate of class 1 employee NIC will be 2% since he has existing salary of 85,000. Wait a minute. When my existing salary is 85,000, my starting bands must have already been used. After 50270, you all know that the rate of class 1 employee NIC becomes 2%. So his existing salary must have used the starting bands. So that is 268 pounds. Okay. And the additional salary benefit which he's getting, the inflow, I have to net off everything. Salary is the inflow and rest were the cost. Okay, you can show them as negative, this is positive, you just need to net it off. So additional cost in alternative 2. So what will be that? 7,200 paid to the friend, 1980 paid for the transportation, 5366 paid for income tax, 268 paid for class 1 employee NIC. And only inflow is the additional salary of 13415. So the additional cost in this option is 1399. Here the additional cost was 4,888. Here it is 1399. So from B's perspective, additional salary option will result in lower cost. Okay. So will you repeat it again? Yes, I will repeat. You all know. In alternative of additional salary. Okay. See. The question said that talk about the total cost from the B's perspective. So in alternative one, B was getting everything. The employer was giving you the accommodation, furniture, everything. So his only cost was the income tax which he has to pay on this benefit. This 12,220. Income tax will be on this benefit. There was no NIC. Since his existing salary was 85,000 pounds, so he was a higher rate taxpayer, we directly applied 40%. In alternative two, we will have to incur some cost from his additional salary of 13415. His net cost will be rent paid to friend, additional travel cost, income tax, class 1 employee NIC. We netted off the additional salary to get his additional cost in this alternative. So if you look at it, I particularly believe that it's not difficult. It's just about good intellectual level, analyzing the rules in a better manner. Ideal PLC was willing to pay additional salary such that their total cost was not increasing. Okay. So we said that what was the total cost in the situation when they were providing the accommodation? Ideal PLC paying rent, household bill, furniture cost, and class 1A employer NIC on the benefits provided. We did the valuation of the benefits. If Ideal PLC will pay the salary, they will have to pay class 1 employer NIC also. So they need to manage their total cost. So we considered 15226 as the gross value, divide by 113.8 and multiplied it by 100. Okay. Then from the perspective of B, in alternative one, we discussed that, okay, in alternative one, he will have to suffer the income tax cost on his on the benefits which he is getting. Okay. In alternative one, he was getting the total benefits of 12,220. Okay. Income tax and NIC is on the value of the benefits. In alternative two, he will be getting additional salary. On that additional salary, he will be paying the rent to his friend. He will be incurring additional travel cost. He will have to pay additional income tax. He will have to pay class 1 employee NIC. I hope that you guys are getting it. Okay. Now the next requirements of part B are in relation to Dana, which we obviously need to read. So let's go and look at the situation for Dana, that what the question is saying in that regard. Dana is UK resident and domiciled. Dana will commence a permanent full-time job with Ideal PLC on 1st April 26. Dana will receive an annual salary of £120,000 and will have no other source of income. Plans to retire on 1st April 2030. Will move into a new house he purchased near to Ideal PLC office on 1st April 26. Has been advised to nominate this house as her main residence from this date. So she already had some residence which was her main residence. Now she's purchasing a new house. So she has been advised by someone that make this new house as your main residence. Let's look at it. Dana's original house. Dana purchased house 1 on 1st April 21 for £296,000 and has lived in it since that date. Dana will move out of house 1 and let it to the tenants from 1st April 26, because then she will move to the new house. Dana will move to the new house and she will let out her old house. Okay, let's see what you'll be asking in relation to it. Then there is Dana's employment income. Ideal PLC set up a share incentive plan which provides free shares to each employee each tax year. Dana intends to purchase dividend shares in the SIP. The SIP does not permit partnership or matching shares. Dana is eligible to join the plan from 1st April 26. I believe you all remember the share incentive plan. There are free shares up to £3,600 per year. You have to keep the shares in plan for a period of 5 years. If you use dividend to purchase further shares, there is no income tax on the dividends. Okay? So now let's go and look at what he's asking in relation to Dana. Part B1, 6 marks required. We are not required to do detailed calculations. Let's look at it. Now, explain the capital gain tax consequences if Dana sells House 1 on 1st April 2030, having elected to nominate House 2 as her principal residence from 1st April 26. And second, not made such election and conclude as to whether or not making such election is beneficial. You should assume that the gain on house one before any reliefs will be £52,000. See, this is an interesting requirement. You just need to understand it. You need to get into the rules. See, if Dana will elect that her house 2 is her main residence from 1st April 26, then what will happen is that private residence reliefs which will available on house 1 will end from 1st April 26, because then this house will not be your main residence. Then this house will not be your main residence, so there will be no private residence relief on that. But if you don't do that election, house 1 will continue to be your main residence and you may get the deemed period reliefs. Just look at it while I solve this answer. Okay. If house 2 is nominated as main residence from 1st April 2026, just listen to me. The first option is elected to nominate house 2 as the principal private residence from 1st April 2026. In this situation, Diana will cease to get private residence relief on house 1 from 1st April, house 1 from 1st April 2026, as then house 1 will not be her main residence. Just listen to me. If you will cease your house 1 to be your main residence because you will shift to house 2, in this situation, Dana will cease to get private residence relief on house 1 from 1st April 2026. Why? Because you are shifting your main residence to house 2. You're going to the tax department and you're saying that, okay, now house 1 is not my main residence. House 2 is my main residence. I want private residence relief on house 2. So tax department will say, okay, from 1st April 26, when you are shifting this, house 1 will cease to get the main residence reliefs. Now just look at the ownership period. If ownership period of house 1 is evaluated, okay, when was house 1 purchased? It was purchased on 1st April 21, okay, and Dana continued to live in the house till 1st April 26, because then she will be letting it out. House 1 was purchased, is evaluated. House 1 was purchased on 1st April 2021 until 1st April 2026. It was actually occupied by Dana. This period will be exempted under private residence relief. Okay. Now, from 1st April 2026 to disposal date of 1st April 2030, this house was let out. Okay, this house was let out. It's clearly stated here. You can go and look at it. Then I will move out of house one and it will be letted out to the tenants. And the house one is planned to be sold on 1st April 2030, as it is written, that if Dana sells the house on 1st April 2030. Okay, period from 1st April 2026 to 1st April 2030 will not qualify for private residence relief except last 9 months before disposal. You all know that last 9 months before disposal are always deemed period of occupation. Okay, if you don't remember the rules, you can just go to the summary notes, you can write private residence relief and you can get all of the rules. Last 9 months before disposal are always exempted if you have occupied the property just for 1 month. Okay, except for last 9 months before disposal date. Okay, chargeable period will be of how much? 1st April 26 to 1st April 2030, 27, 28, 29, 2030. 4 years. 4 years are 48 months minus last 9 months before disposal. So that is 39 months. Okay. Total exempt period of property is 1st April 21 to 1st April 26. Okay, this was the exempt period 22, 23, 24, 25 and 26, 5 years. So 5 into 12, it was 60 months. Okay, you can write here also. Exempt months will be 60 months, which are 5 years. So total exempt period is 60 months plus 9 months. So that is 69 months. Okay. Private residence relief will be 52,000 is our gain. 52,000 multiplied by 69 months divided by 69 plus 39. Okay, the total months come in denominator. 52,000 multiplied by 69 divided by 69 plus 30. So private residence relief is 33,222. Chargeable gain will be 52,000 minus 33,222. So that gives you 18,077 pounds. If we nominate house 2 as our main residence from 1st April 26, then private residence reliefs will cease from that date. See, if you just think logically, otherwise you could have covered in deemed period rules like 36 months absence due to any reason, 48 months due to employment, self-employment. All of those rules were restricted. Okay. House 1 was purchased on 1st April 21 until 1st April 2026. What happened was that this house was actually occupied. Okay, this house was actually occupied by them. So that is the exempt period. From 1st April 26 to disposal date of 1st April 2013, this house was letted out. Period from 1st April 26 to 1st April 2030 will not qualify for private residence relief except last 9 months before disposal. Because for that, the only condition is 1 month occupation. So chargeable period will be 48 minus 9 months, 39 months. The total period 27, 28, 29, 2030. 4 years. 4 years means 48 months. Last 9 months were exempted, so 39 months were chargeable. Exempt months were 60 plus 9, 69 months. Private residence relief £52,000 was your gain into 69 months divided by total 69 plus 39. This was your relief and chargeable gain was 18,777. Just have some patience. If house 2 is not nominated as main residence, now just listen to me. In this situation, house 1 will continue to be main residence till disposal date of 1st April 2030. Dana will be able to claim deemed period of occupation reliefs on her absence period from house 1, will be able to claim deemed period of occupation reliefs on her absence period of house 1, which is from 1st April 2026 to 1st April 2030. This 4-year period will be exempted due to absence of property due to employment reasons. Okay? See, let me repeat it again. If house 1 will continue to be your main residence, then you have deemed period of occupation reliefs, if you remember. Then you have the reliefs of deemed period of occupation. Okay? In deemed period of occupation, you have 36 months due to any reason, any period abroad due to employment, there is 4 years due to employment or self-employment. Okay? In this situation, house 1 will continue to be main residence till disposal date of 1st April 2030. Dana will be able to claim deemed period of occupation reliefs on her absence period on house 1, which is from 1st April 26 to 1st April 2030. This 4-year period will be exempted due to absence from property due to employment reasons. Okay, now, condition to reoccupy property at the end of deemed period would be waived as Dana was absent from property due to her employment. Okay, normally there is a condition to reoccupy the property, but if there are issues of employment, this condition gets waived. And if you can go and see, Dana moved to the new house due to her job with Idel PLC. Okay, in this situation, there will be no chargeable period on house 1, and whole of the gain will be exempted through private residence relief. Okay, so from private residence relief on house 1, it is beneficial for Dana to keep house 1 as main residence till disposal date of 1st April 2030 and not to nominate house 2 as main residence. But if you look at a broader perspective, if you continue to keep house 1 as your main residence, then on house 2, you won't be getting private residence relief. Because you cannot say that, okay, I was living there, that was my main residence. No. You have to tell to the tax department. From the house 1 perspective, obviously it's beneficial to keep it as your main residence because in that case, house 1 will get exempted. So can you please repeat it? Yes. See, if we nominate house 2 as our main residence, then private residence reliefs on house 1 will stop on 1st April 26. You don't have any deemed period reliefs then. Okay, just last 9 months exemption will be available because that's always available. That only requires 1 month occupation throughout ownership period. Okay, but if we don't nominate house 2 as our main residence and we continue house 1 as our main residence, then even though you are not present in the property, even though you are not present in the property, you have a lot of being period rules like 36 months absence due to any reason, any period abroad due to employment, 4 years due to employment, self-employment. Since Dana is within UK, she is not moving abroad. She's within UK only. There's nowhere written that Ideal PLC is a foreign company. So we simply said that 4 year period due to employment purpose can be simply exempted. And condition to reoccupy like actual period of occupation will be waived as Dana was absent from the property due to her employment. So in this situation, there will be no chargeable gain on house one and whole of the gain will be exempted through private residence relief. So from private residence relief on house one, it is beneficial for Dana to keep house one as her main residence, not to nominate house two. But obviously, on a broader picture, when she's keeping house one as main residence, then in this 4 year period, house two is getting a chargeable period. But our question was to just comment on the consequences from the perspective of house one, which we did. Okay? I hope that you guys are getting it. But it is one of those requirements in which a student has to stop and read it on his own also, so that the things get clear in his mind. Okay. Coming to the last requirement, which is a very easy 4 marks requirement. Okay, let's look at it. Explain the implications for income tax and national insurance contributions of Dana participating in Ideal PLC's share incentive plan if she retires as planned on 1st April 2030. Let's look at it. Okay, so if you look at this share incentive plan thing, Ideal PLC has set up a share incentive plan which provides free shares to employees each tax year. Dana intends to purchase dividend shares in SIP. The SIP does not permit partnership or matching shares, like the plan won't go further. Dana is eligible to join the plan from 1st April 26. Now, if you remember the share incentive plan, okay, the SIP plan, there can be free shares up to £3,600. Then there were rules for partnership shares and matching shares. But the question said that the plan of Ideal PLC do not include the partnership or matching shares. So we just need to comment on the free shares thing. Okay. If we use dividend to purchase further shares, there will be no income tax on those dividends. We have to keep shares in plan for at least period of 5 years. Now, if you look at the situation of Dana, Dana is joining the plan on 1st April 26 and she's retiring on 1st April 2030. So apparently she won't be in the plan for 5 years. 2027, 28, 29 and 30. She will be there for 4 years only. So apparently she won't be completing 5 years, so her plan will become unapproved. But when there is a reason like retirement, an exception can be applied to the tax department, because it's not like she's leaving the plan on her, like she's continuing the employment and she's extracting the shares. But since she's retiring, so that is one of the legitimate reasons. So that you can discuss. So explain the income tax and NIC implications of Dana participating in Ideal PLC share incentive plan. So Ideal PLC can give free shares to Dana of value up to £3,600 per year. Let me copy the pound sign, because we are not provided with the exact value that what value of shares will be given. It's just free shares will be given. Value of up to £3,600 per year without creating any tax implications. Okay, free shares of value of up to £3,600 per year can be given. Okay, further, if Dana will use dividend of these shares to purchase further shares in Ideal PLC, then income tax on those dividend will be exempted. Okay, if you use the dividend to purchase further shares, income tax on the dividend get exempted. You have studied that Any dividend received on these shares will be exempt from income tax and NIC if used to purchase further shares. Okay, there will be no income tax on those shares. Now, Dana will join SIP on 1st April 2026 and her retirement is on 1st April 2030, which is a period of 4 years. Normally, for an approved share incentive plan, holding period required is 5 years. Otherwise, income tax and NIC arises on the plan benefit. In case of Dana, as her reason to exit from plan is legitimate, that she is retiring from company, she can apply for exception to HMRC. Otherwise, the minimum ownership period requirement is 5 years. Okay. So explain the just a 4 marks requirement. So it was a brief one. Explain the implications for income tax and NIC of Dana participating in Ideal PLC share incentive plan. So Ideal PLC can give free shares to Dana of worth up to £3,600 per year without creating any tax implications. Further, if dividend will be used to purchase further shares, then income tax on those dividends will be exempted. Normally, we have to remain part of the plan for at least 5 years. Otherwise, income tax and NIC arises. But in case of Dana, as a reason to exit from the plan, like she's exiting in 4 years, her reason for early exit is legitimate, that she's retiring from the company. It's not like that she just want the money, that's why she's selling the shares. The reason is legitimate. So she can apply for exception to HMRC. If that gets approved, then there is no income tax or NIC. Otherwise, income tax and NIC will apply on the value of the plan, like the free shares, whatever you have got, and the dividends which you use to purchase further shares. So with that, the question is done. If you look at it, I believe that this question was one of those questions which require good intellectual skill, like a student should be good at analyzing the rules. Examiner picked up very easy topics like accommodation benefit, giving additional salary, and he made it technical for the students. Like many students will do mistake, like they will miss out that okay, we have to pick NIC on the benefit value rather than on these outflows. The students will make mistake here. They will miss out this grossing up adjustment. They will make mistakes in these things, like thinking about the additional cost of B. These all are the areas where your practice matters. So that's why I always say that do practice the complete exam papers. Then a complete different evaluation of shifting main residence from house 1 to house 2. That was also a very good evaluation. And last thing was in relation to share incentive plan. With this, our discussion on the official mock exam for June 25 attempt is done. Indeed, I would say that this paper was a mixed paper. Like this question was a bit technical one, requires good analysis. Question 2 was very easy. Question 1 was very easy. But this question 3 was a bit technical one. It's again a reminder that you have to practice, complete exam papers. Your knowledge about the course is important, but dealing with the past papers is also equally important. Okay. If you have any query, you can always connect with me directly on my WhatsApp number. I hope that these sessions have added value to your preparation. Now, there are 3 mock exams which you have to attempt on your own and send me for marking and feedback. Okay. Thank you, everyone.